Hi, welcome. My name is Tammy Warner, and we are continuing our series of videos about how to use Sea Grant's Integrated Financial Planning Guide for Kelp Aquaculture. So in prior videos, we have discussed how to complete your business model page in this spreadsheet and how to complete your startup costs and for either nursery or farming operations. If you haven't done that yet, you definitely want to start with the first 2 or 3 videos of this series. And now we're moving on to the operating expenses page. So here we are on the operating expenses page. And as with all of the user input pages in this model, the page begins with some general instructions for users. The page continues with, as all the user input pages do, with a reminder of your business model. So you chose on previous pages that you are going to be doing a small scale nursery, meaning that is one where you are bringing the water to your facility rather than pumping it in. You are going to be selling some of your seed string by the foot, so you're going to be deriving outside revenue from your seed string, and you're going to be growing 500 total spools. The business model that we chose previously for your operation also includes a kelp farm, a medium-sized kelp farm, and you are going to be engaging in bulk sale of your grown kelp, wet kelp at the dock, and you're also going to be gaining some non-use revenue, and you're going to grow 32,000 pounds, or you're going to harvest 32,000 pounds of kelp. So these are the decisions that we made previously, and they're flowing through from the previous videos. And I just have to again say that these numbers are, completely out in left field. They are not any kind of realistic estimate of any aspect of this business. These are just showing you how the model works. Okay, so don't take the results that we get here as any kind of an estimate of what the economics of your particular business might actually be. Then we come down to the portion of the model or the page where you will be entering your input parameters. And really the only parameters that we're looking at are the rate for labor, including an imputed labor rate or an implied labor rate for your own time. Now, most startup business owners do not pay themselves an hourly rate. However, if you look at the amount of money that you could be making doing something else, like let's say that you always have an opportunity to work for $25 an hour, at the garage down the road or whatever, you should enter that value in there because that is what we call the opportunity cost of your time. That's how much you need to be able to pay yourself in order to be able to have this business be worth your effort. Okay, so we can put that in there, and I'll show you how and in what ways it flows through. Okay, but we're going to put $25 an hour in there for now, just to show you the economics of how this business model works. Okay. Now, you also potentially are going to need to actually pay other people, and this is real cash, right? And perhaps you would be paying people at a different rate if they're working in your nursery operation versus working in your farming operation, possibly, right? So in this case, we've got a model where we've got both nursery and farming going on, so we've got to put in both labor rates here. So let's say that we're going to pay our help in the nursery $20 and our help out on the water for $20 as well. Okay. So those are really the only inputs that you need to put in that are going to flow through the rest of the model. In the rest of this page, you're going to enter inputs sort of, as they come. Okay. So now let's look at the cost of operating a kelp nursery. So first of all, you'll notice that we've only got these white cells available in quarter 3 and quarter 4. Okay, this model assumes that there aren't direct operating expenses associated with running a kelp nursery in January through May, basically, January through June, quarter 1 and 2. Okay, we begin our operating year in quarter 3 for this model, just because of the sort of life cycle of what a nursery and grow out would look like. Right, you'll notice that the input here is how many days of work that you think you're going to spend for each of these quarters, right? So in the late summer and into the fall, how many days of work are you going to give this effort? Okay, so this is for you as the owner. So let's say you're going to work 5 days in the late summer and 10 days in the fall. And you're going to have to hire help maybe for 2 days in the late summer and 4 days in the fall. Okay, you'll notice that when you enter those values, the number of days, right, this calculates the cash cost for your paid labor and the implied cost for your own labor. Okay, so these calculate down here. They are in gray, and you should not be entering values in there. Okay. Now, the other operating expenses likely to be associated with a kelp nursery are just, utilities and any kind of vehicle costs you want to put in there as a budget item. Okay, so let's say that now remember, a quarter is 3 months long, so let's say it costs you $800 for 3 months of utilities in each of your operating quarters, and a couple $100 in gas. We do have the availability for you to enter other expenses, but remember, these are operating expenses, right? All of your cost for all of your, chemicals and lab equipment and nutrient feed and all that kind of stuff, those are entered over in your startup costs for your nursery. And those actually come in, if these are consumables, meaning things that need to be replaced every year, they pick up into this line here, into line 76, okay? This is another one of those cells where there's an explanatory comment that tells you what's going on in these cells, okay? You can put different estimates, right? So here in quarter 3 of the first year, this is picking up, as you can see from the startup nursery page, right? You can go ahead and instead of using that same value, you can go ahead and change your number for outlying years if you want to. That's fine. And the depreciation value here is obviously inside of gray cells, and it just picks up as 1/4 of the total depreciation, annual depreciation associated with the nursery equipment that you estimated previously. Okay, so these are your overhead expenses for nursery operations. Again, all you have to do to input in there is your owner's labor, your hired labor for the 3rd and 4th quarter, and then you would fill that out also for years 2 and 3, which we won't do right now. Okay, so that's it for the nursery, right? Now, here we have, this is where the owner's labor piece comes into play, okay? This is your total cost here, which is, your utilities, your supplies, and owner's labor. Okay, that's your total cost. Total variable cost is that total cost minus the depreciation, because depreciation doesn't vary. But what we're mostly interested in, though, in reality, is the cash outlay, right? So this is your variable cost minus this owner's labor. Okay, so that was the operating expenses for a nursery operation. They are quite, the input is quite simple. You're just labor, utilities, any kind of vehicle costs, and then the flow-throughs. Okay. Now, running your actual kelp farm, the operating expenses have been broken out into a number of different subcategories because of the different activities that you're going to be going through over the course of the growing season and before. So here we have permitting and legal expenses. The first entry here just flows through from what you entered as part of your startup expenses. The rest of them you can, if you have other permitting that you know is going to occur, you can enter your own values or estimates for that. So now we move on to the operating expenses associated with building out your farm, which you need to specify which quarter this operation is going on. Let's assume for this purpose that it's in the fourth quarter, sort of in the late fall, and so however many days of work for the owner, you, to be laying out your array. Let's say it's 5 days for you and 5 days for your hired help. You may need to purchase some new materials. Maybe in the next year, maybe we do 5 days and 5 days in the next year, and you also have to purchase $1,000 worth of new materials, replacement materials for things that got broken. Your fuel for this exercise, you enter your estimate there, say $500 for fuel, and then of course, as in all of our sheets, you have the ability to specify any other categories of expenses that you think are associated with building out your farm location. Okay. Again, right here we have our total cost. This includes owner's labor. Okay. The total variable cost is the total cost minus the depreciation, which again flowed through from your startup expenses. And these are depreciation. I have broken out the depreciation expense as best I could to the actual activity where it's associated. Right, so this isn't your total depreciation on all of your build out. This is just for the array, to make sure that it's sort of attributed to each activity appropriately. And then you subtract out your owner's labor from the total variable cost. So we have the same subtotals for each of these. Okay. Then again, there's the cost of seeding, right? So maybe that's 2 days for you and your people. Maybe there's some fuel associated with that. Let's say $200 in fuel, and so the same deal, right? So we have subsections for each of the activities associated with operating your kelp farm. Okay, you're going to need to monitor your kelp farm over the season. Let's say that this now is labor that's going on in quarters 1 and 2, so late into the winter. So maybe 5 days in each of those quarters for you and your help, and there's $500 in fuel for each of those, and you're just checking your plants, and then the labor associated with harvest. So now we're continuing to move through the year. This is labor associated with quarter 2 in your first year, and let's say that this is a lengthy and laborious exercise. So we have 10 days in labor and $1,000 in fuel. And if you've got harvest specific equipment that you're depreciating, that's where this depreciation line comes up. Same subtotals as above. And then there's the process of gear retrieval, maybe 2 days for you and your help, and $200 in fuel, right? And then that gets us through the sort of growing season and all the different activities and timing of the activities, and particularly the labor associated with each of these activities of growing your kelp, right? So those are your direct costs, including the depreciation associated with all of those different activities. We move down then into the indirect costs, or the annual overhead associated with not just running a nursery and running a kelp farm, but just with running a business, right? So if you've got a truck that you're using for this business that has expenses, maybe you need to spend $1,000 a year maintaining the thing. You got to register it, you got to insure it, right? So maybe $500 for insurance and $200 for registration, right? Same thing with the boat. Do you need to pay to store it in the off year? Do you need to maintain it? Spend money on maintenance for your boat? Again, these are overhead values that are not directly associated with the operation of your business, of your kelp farm, but that are the cost of doing business. Okay? Your communications, so your cell phone, maybe that's $1,000 a year. Okay, so these are the annual expenses. You're looking at how much per year you spend on these. Okay, if you have an office that you are, paying to heat or paying the electric bill for, right? Any kind of dockside services, all these kinds of business expenses associated with running your kelp farm or your kelp nursery that you need to account for, that the harvest needs to pay for, right? So an important expense is marketing, right? So let's say you got $2,000 in marketing expenses. Maybe you got to pay $1,000 a year to get somebody to do your taxes. Maybe you have business insurance, just regular business liability insurance. This line here is the depreciation that's not getting picked up in the specific activities that I couldn't identify as directly associated with specific operational activities. That's just picking up and making sure that we're counting all the operation, right? And this gives you your total overhead. Okay. The difference between your annual overhead of $10,000 here and your cash outlay of $6,300 is, of course, your depreciation, which is not a cash expense. Right. So this is how you enter the data into your operating expenses. Now the next thing we're going to look at in the fifth video is going to be how are you going to pay for all these purchases at the beginning of time? How are you gonna make it actually happen? Right, so that's what's coming next.